afternoon and welcome to BizTech's Asian Midday Market Watch. It's Tuesday, the 16th of January, and together with my co-host Jeffery Halley, we have Jessica Amir, market strategist from moomoo, as our guest today. Happy New Year, Jess. Great to have you back on the show.
Happy New Year. Great to see you as always.
Now, I'm going to come back to you, Jess, later and get your insights after Jeff basically takes us through market performance in the first half of the day.
Yeah, well, it's almost a sea of red today. US markets were closed last night for Martin Luther King Day, so I suspect there's a bit of profit taking going on around the market. When you look at Kuala Lumpur, it's down 0.07%. Shanghai has fallen 0.7%. The ASX down in Sydney has fallen 1.06%. And we've got the Nikkei 225 down 0.64%. Hang Seng having a tough day at the office, down 2%, while the South Korean Kospi is down 0.7%.
So, Jess, why the sea of red today? Some of the markets like the Hang Seng really not performing very well.
There's a lot of risk creeping into markets. So we had a stellar run right from November to December globally, particularly in the US and here in the Asia Pacific. And then, of course, naturally, when a market or a stock goes up in the order of 10%, as we did, you're going to see some profit taking. And that's just 101 investment management, isn't it? I guess you're trying to take away some of that cream and lock it away for a rainy day. But that's pretty much what's happening. But the catalyst for that is what's a little bit more gloomy, and that is that we are seeing firstly inflationary markers pick up. And what I mean by that is oil prices, uranium prices, second of all, and of course other inflationary indicators are likely to spike up, such as the cost of goods and insurance costs as well. So there's a bit of concern creeping in, and that's a catalyst for the profit taking.
Now, Jeff, you've got a couple of views on that. We were talking about this offline just now.
Yes. Sorry, I was going to say perhaps we could dive into that a little further. I know you're concerned about perhaps the market's underpricing upside inflation risks, and I get that because the market is very long what I'm calling the buy everything Fed easing trade. So perhaps you could walk us through some of these risks in a bit more detail, please.
Yeah, it's a great question. So I guess coming into this year, there were a lot of expectations that we'd see some rate cuts and they'd be heavy loaded and hit us. So cuts expected as early as March. And that is exactly what the futures are still predicting. Before I came in and chatted to you guys, the futures are unchanged. But the concern is that what we're seeing now is the market is actually, I guess you'd say, got a little bit potentially ahead of itself. Not only from a technical perspective is the market in overbought territory, but second of all, you do have that Middle East tension picking up. And when we can dive down into that and just pause on what is going on, the shipping rate insurance is probably what's most alarming. And so when we do have the Red Sea area, I guess there's now calls for ships, oil ships, not to pass through the Red Sea. But of course, we've got goods passing through the Red Sea continuously. And we think about the turnover passing through that corridor, it accounts for 12% of global trade. So think about that. And then think about now insurance to pass through that area is actually 1%. And if you think about a vessel that's carrying, say, a load of, say, $100 million, and they're paying an insurance levy of 1%, obviously that's a lot of money, so $1 million. And then so it's a no-brainer if you just think about that thesis and then extrapolate that out. Obviously, 12% of the world's trade, that's obviously going to put upward pressure on the cost of goods. But of course, 101 is that vessel rates are indeed going up, and they were already going up prior to that. So oil prices, they're up Secondly, uranium prices, which we haven't even touched on, shipping rates and insurance costs. So all in all, I think the market probably potentially got a bit ahead of itself and is due for a pullback.
I was going to ask, the uranium price itself, now you're saying it's at multi-year highs. What do you believe is driving this rally in uranium prices?
Well, there's a couple of things. The world's biggest producer of uranium actually stepped away from their guidance levels for the year. But coming into this year, we've been speaking about uranium for a long time now, and uranium is touted as one of the cleanest sources of energy, would you believe? There's a lot of, there's a lot of damage that's been done to the uranium name in the past, but if we just isolate it out for its as an energy source, it's got a very dense energy source, and it also needs less raw materials than most other energy sources. So obviously, when you've got the EIA and other global organizations coming together, and governments such as the United States, China, Japan, the UK, they're vowing to have a percentage of their energy come from uranium. So there's pent-up demand. And then, of course, when you've got supply coming out of the market, i.e. the world's biggest uranium producer saying, hey, we're not going to produce what we said we would, obviously there's a supply and demand imbalance. And that supply demand imbalance is continuing to put upward pressure on the uranium price. Before coming in today, the spot uranium price, before coming into chatting to you guys today, the spot uranium price is already this month, in 16 days, it's up 14%. So the uranium price itself is on a tear, and I guarantee if you have a look at the month-on-month increases over the past 5 years or even 7 years, there's been a lot more green days and months than there has been red ones. So there's a lot of momentum, a lot of steam coming into this area. I don't think it's going to go away anytime soon.
Now, on a different note, Jess, we can't have you on the show without talking about cryptocurrencies, particularly Bitcoin. There's a lot of movement in the last few weeks on Bitcoin. The ETFs have been approved. Who are the winners and the losers in this whole equation right now?
Well, obviously, well done to anyone who's been riding this Bitcoin wave. Also, any beneficiary listed profitable company that's been riding on the BTC coattail. So think about Nvidia, think about Block. So we've seen a lot of companies, I guess, benefit from Bitcoin rising in value. And so if we isolate out Nvidia, so they're obviously going to be selling more chips to those that are mining cryptocurrency. We do know that Nvidia actually doesn't quantify how many chips that they sell or what percentage they sell to Bitcoin miners, but obviously there's going to be a lot more demand for that. Second of all, we know the other most profitable company on Wall Street that makes money from BTC is a company we've spoken about a lot, and that's Block. So they make 41% of their revenue from Bitcoin transactions. And very recently, Block or Square, they go by the two different names, they also rolled out a Bitcoin wallet. So that Bitcoin wallet is also going to increase. So first of all, you've got the companies that they're going to be benefiting from Bitcoin's rise. And then, of course, think about the fund managers that are going to be benefiting from the rise of AUM or FUM. So think about Fidelity, think about BlackRock. So BlackRock saw some of the most flows in funds under management after the Bitcoin ETFs came onto the market last week. But this week will be the tell-all moment because it'll be their first full week of trading. So keep an eye on those. And then thirdly, you might want to keep your eyes on those financial groups that you can actually trade through, that you can buy or sell Bitcoin ETFs through. So there's going to be a lot more transaction volume picking up. But of course, because 2024 is going to be a good year, equity trades, pure vanilla ETFs as well, there's going to be a lot more trading going up as well. So financial firms going to be a key beneficiary. And then last but not least, think about the Bitcoin use case as well. We already know, a lot of people, I dare say, might not know that Microsoft and Tesla already accept Bitcoin as payment. But you can also use Bitcoin to pay for some flights, to pay for coffees. Depending on what country you're in around the world, you can actually take out Bitcoin out of an ATM. So obviously the use case for Bitcoin is going to increase considerably now that the SEC has essentially mainstreamed Bitcoin for everyday use.
On that note, Jess, thank you very much for your insights. Thank you for coming on the show.
Thanks for having me.
Now, this has been BizTech's Asian Midday Market Watch, and with us has been Jessica Amir, market strategist at moomoo. I'm Brian Fernandez.
And I'm Jeffery Halley.
Please check out this show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.